man, it's gonna be a tricky day, guys, but I am happy to be back. It started with one doctor, he had to call two other doctors, 4 different sets of flyers, 24 stitches later, 4 hours of surgery, and here I am, back again, ready to conquer the markets. Guys, today's gonna be a very interesting day because on one end, we're seeing numerous charts that point into a further drop. And congratulations to those of you who fearlessly kept your positions overnight. You're going to have a very nice payday today as the market is opening with a gap down. So I hope you guys are taking some notes as I'm going for some of these observations. And sometimes when I have a chance, I try to text some things out throughout the day and point out, like yesterday we had a move 6 behavior, which often will resolve into a gap down the next day. So hopefully you're not just, looking at this, you're actually using this and taking advantage of the current market conditions. So with that said, why is today going to be a tricky day? The main component of anything is volume. So the volume has been very tricky, and we're going to talk about that in detail in just a moment. So here's some of the observations from yesterday. So yesterday was a third day bearish gap created pre-market, and it was not closed intraday. The market looked like it was trying to go higher on the fake Trump news deal, and boy, that guy's good. I mean, that guy he'll make news out of nothing. Like at some point they were talking in the news how, oh yeah, we're gonna have a deal. And he's like, oh yeah, they're coming to the White House. It looks like they're ready to make the deal. Hello, dude. We knew they were coming to the White House for 3 months in a row now. So where's the real news? There is no news, guys, but he's really good with making news out of nothing. So if it is that type of news, then you want to short it. So clearly for those of you that jumped in the market, bought some puts when this fake news came out, you were able to buy puts at really good prices. So good job on taking action, and congratulations. Now, worldwide, the markets are showing signs of bigger drop in the charts. Japan is continually drawing this bearish move 3 over the course of a number of days. We're going to take a look at that in just a second. Now, here's the main concern, right? It appears that VIX may be hitting a double top around 22 area here pre-market. So stocks are going down on lower volume, which is actually bullish. So for that reason, what we're suggesting, and it could be prudent for those of you that got some good gains. I know guys that I talked to yesterday, they're sitting on $20,000, $30,000, $40,000 gains for the week. Hey, take some profits. There's nothing wrong with that. Okay, so collect gains. I would consider selling half of the puts, not necessarily at the open as it's stated here, but what I mean at the open, the market could easily drop to a level of 28.46 or maybe just at that 28.50, maybe 28.49. So between 28.46 and 28.50, if we see the market get to that level, it may be prudent to actually take a little bit of gains off the table. Why? Because we could expect a bounce. Again, yesterday we were able to identify that this level of 2890, 2900 is sort of a resistance level for the market. And so what we could get easily is maybe a spike lower at the open, just slightly lower. We're currently trading in the levels of 2860, 2870, range 2865 if you want to call it that. So we can get a quick drop lower, but if the volume is absent, that tells you, look, don't be greedy, take some profits right there and position yourself to better interest, because honestly guys, the best trading day is tomorrow and Monday. So lock some gains and just position yourself to fully take advantage of this market. So let's take a look. Why do we think the market could continuously fall today and tomorrow? Now, when I'm saying tomorrow, it does not mean that we expect the market to be falling tomorrow entirely the whole day. What we're expecting is for a possibility of maybe a move 13 tomorrow, meaning that the market has now subsequently been falling. If we end up in a drop again overall today, for 4 days in a row. So at that point, we can easily expect a reversal at 13 in the morning, but it all contingent upon the volume. So the number one thing I want you guys to pay attention to is not what they're talking about on CNBC, not what they're talking about on Bloomberg. None of that is relevant, because just focusing on the volume will tell you what investors are actually doing, what type of action they're actually taking based off that news that's evolving everywhere. So on S&P yesterday, we do have a bearish reversal candle. In the prior few videos, we've shown you multiple instances, the chart of bearish reversal candles on the stock of Apple. Guess what Apple does yesterday again? Another bearish reversal candle on Apple, but now it's closer to that support level of $200. So 201, 202, it really doesn't look like it wants to break that level. And so the same observation would pertain to stocks like Amazon, who's been very hesitant to fall below that 1900 level. Pre-market so far, Amazon has been as low as 1896 and promptly just bouncing out of that area each and every time. So it would be wise to really wait till we break below these levels if you want to build substantial positions, meaning Amazon, solid break on solid volume below 1900, Apple, solid break on solid volume below 200. We're not getting that. When we're getting these stocks falling right now, they are falling on low volume, which is a huge concern. So coincidentally, pre-market so far, S&P traded down to 28.58, which coincides with this line of resistance. So if we don't get a quick drop lower within the first 30 minutes of the market open, below this blue line, then it would make sense not to just close half of your positions, but really close all of them in the expectation of a bounce back to this 2890, 2900 level here, to reposition yourself, being able to buy those puts at much better prices going into tomorrow with an expectation of a gap lower tomorrow, closing out your positions in the morning, getting ready to reverse them in the expectation of a run-up in the markets going to the latter part of the day. So the only thing, as you can see, everything is bearish here and showing signs that we can get another day or two lower. However, this volume, right? Finally, yesterday we noticed we're getting a spike in volume, or the day before yesterday, but yesterday the volume subsided again. So the markets were kind of trying to make their mind, should they run for the exits or not. Clear confirmations in Japan, and again, oftentimes I use Japan as a reference because Japan and S&P futures have the highest correlation in my view. So, over the last 5-day time frame, we're clearly observing this move 3 behavior. So gap down, tries to take the gap, moving lower, gap, lower, gap, lower, gap. So this is very bearish, and it could continue. In other words, there's nothing that's pointing to the fact that 21,260 is the low in Japan. We could easily find ourselves at 19,800 by Monday. Now, I know this sounds pretty aggressive, and your question is, well, why would we want to be, closing some of the puts this morning if we really think Japan is going to go down to 19,800? Well, there's just one big problem, guys, and it's the problem of low volume. Just remember this, big drops and crashes, they don't happen on low volume. So far, we don't have a situation, despite of the VIX trading above 20 consistently over the course of the last couple of days, we don't have a situation where people are really panicking because they're not taking the money out of key stocks like Amazon and Apple, and yeah, just a little bit, but that volume is just not sufficient. And so what we really want to see today is a huge volume increase to the downside. So if we're not getting huge volume increase and just things as casual, kind of like yesterday, even though we did get a sell-off in the last 15 minutes, which is clearly bearish, but overall the volume is just there in the expectation of getting this news. So we may actually not get a huge move until after the weekend on Monday. And so if the market is just going to keep going between 2850 and 2900, if you get your entries wrong, then your options could just decay over the course of today and tomorrow. That's why I'm suggesting that locking gains and just standing on the sidelines until we get the volume confirmation. And we're talking about the volume. We're not just looking at making volume observations on the downside. We could easily hit that level of 28.46 and we'll get a spike in volume to the upside. Okay, so pay very attention to the volume is the key thing that's super important for today. Now, yesterday's market move, guys, I know I've had a lot of subscribers reach out to me with a question. Man, it looked weird. What move was it? So study the 13 markets move formula, guys, for your own good. Okay, there's actually 3 types of market move 11s that are described there. They all resemble a pyramid, but there's 3 variations. So we'll break down this move 11. Clearly, we're logging it with this behavior of a move 6, and we're going to talk about that in just a sec as well. So, as in any move 11, it's important to understand that the market is going to open and close roughly at the same levels for the day. So, in this case, here's the opening at 9:30. This is where the market opens. This is where the market closes. Literally, we just have maybe a couple of points in difference here. And that is a characteristic of a move 11. Now, sometimes the pyramid will be built in the positive territory. Sometimes it's going to be built in the negative territory right here. In other words, the market's going to gap down. It's going to go higher intraday, but it's going to finish in the same negative territory where it started. And in this particular case, we did have a gap down yesterday. Okay, in relation to the prior day, we opened lower, which was right here, made this pyramid. Now, some pyramids, they're a lot easier to distinguish, right? But in this, I mean, you shouldn't be able to confuse this. You may have to use your imagination just a tiny bit, guys, but look at this. It's a pyramid with a triple top. So study the chart's divergences because it talks a lot about these patterns of topping, the multi-top formations, the double top, the triple top, the quadra-top, and so on. It would really make your job a lot easier, guys, to understand these things. So in this case, we have top 1, top 2, top 3. If you want to think of it as one big top, right? Because what move 11 essentially is, it's a topping formation indicating further drop, and that's exactly what we're getting pre-market today. So this move 11 was an indication, especially combined with this move 6 type of behavior, sell-off on huge volume in the last part of the day. It gives you a higher probability of a gap down. So for those of you that are just trying to trade the indexes, this information is hugely valuable because you could have simply, observing this behavior, you could have simply bought puts just into the close. And, you know, so far the markets are down on S&P anywhere from 22 to 28 points this morning. We actually did hit a low of 28.58, so we were down almost 30 points. I mean, that's a nice and easy trade for anybody to take advantage of. Okay, and I'm actually strongly in favor of trading actually these S&P futures, right, opposed to trading the SPY. Yes, they are more money, but your returns oftentimes will be greater on this. You can use the same strategy trading the Qs, right? But you know, the idea is this: once you make these clear observations, you know, the probability of outcome goes up substantially, especially when you combine it with certain VIX environments. Okay, so the behavior of move 6 is clearly, I'm trying to actually make a separate slide to make sure that we break this down, because I even had some questions about that from some new subscribers. Guys, look, when you see this sharp drop, and a typically move 6 type of behavior will happen in the last 2 hours. Prominently, a lot of these move 6 behaviors will be in the last 30 minutes, 45 minutes of trading. And they will be characterized by a huge spike in volume, which is exactly what you see on this chart. See, when we were going higher for the day, when we had spikes higher, these green lines right here, they were on lower volume than this sell volume at the very end of the day. So last 15 minutes, literally, I mean, Dow Jones dropped over 100 points. That is notable. That tells you there is a fear that despite of all multiple times we try to go, and look how interesting this is, right? So pre-market, we set this level of 28.99. In regular session, we try to take that level out once, twice, 3 times, we fail. And again, I compliment those of you that hang in with your positions till the very end, because once you identify that this is the level of resistance, you don't want to be jumping out. You're going to be very tempted as a trader to actually jump out right here, because it's going to look like, oh man, the trade deal, fake news. They're buying the fake news. You know, it looks like the market is going to go above 2,900, but clearly that's not the case. So if you see the markets approaching again this level at any point today or tomorrow, and it is doing so on low volume, then you want to keep coming in, and this actually generates a good entry for you. Now, if you see the market approaching this level on huge volume, you see key stocks like Apple and Amazon, they're bouncing higher on huge volume. The volume is really starting to shake up the market on the upside. Then clearly you don't want to be using that as an entry on the put side. You may actually want to consider buying some calls. Okay, but let's not get carried away. Remember, this is a very good illustration of a move 6 behavior. For those of you that are interested in swing trading successfully, this is something to really pay very close attention to, especially when this move 6 behavior is in the middle of this pyramid move, as we're taking a closer look here, right? So 11 is a topping move, 6 is a topping move. You got basically 2 topping moves inside of one day. Okay, that is a clear indication of the further drop. So we do get the drop now, and now the sequence for last 2 days is 311. This is how it looks. And one of the main concerns the day before was this, right? In this move 3, which was a beautiful move, later in the day we get this huge spike in volume. And so yesterday I mentioned that, look, everything looks good for the bigger drop besides this. This was a big concern yesterday, because look at the volume. So the markets were dropping all day on Tuesday, and then huge spike. Now with the move 11, we pretty much erased all of these bulls out of these equation. And so what we're seeing is Monday and Tuesday we had a move 3 followed by a move 4 behavior in the last part of the day, in the last hour, in the last 30 minutes. But yesterday we got a clear reversal of that. So all the bulls that thought, okay, the market will bounce after 2 days, guess what? They got taken out right here. So I've got these 2 orange areas to bring your attention to these guys, because this is super important. And if you were to pay a little closer attention to this 2-day time frame chart, what we're seeing is a small 11 move pre-market right here, which coincides with that 28.99 level. So we had a pyramid pre-market indicating that it was going to be potentially a move 11. I missed it at the time, but that's why, guys, it really pays to study these charts and observe. Maybe occasionally some little things like that could produce some substantial results. So this was an indication. I was ready to go to the doctor's office, so my mind was not 100% there, but small 11 pre-market right here coincides with the top formation in the regular trading session. But the point of this slide is to show you the reversal in behavior going into close compared to the prior 2 days. So the bulls were quite active. All of a sudden they got taken out by the bears yesterday, indicating that a lot of people actually rethinking their bullish positions right here. 5-day sequence 2, 1, 3, 3, 11. And just to review, just to get the main point across, short in the tops, right? So we've talked about, can you see this pattern to identify what's next? Top, top, top. These tops continue, right? Do you see why it would make sense to short the top every time market bounces, clearly. And continues again. And what happens? What happens next, guys, is pop and drop dance continues. So now we have even more data confirming that this pop and drop, pop and drop, pop and drop, pop and drop, pop and drop behavior is the dominant behavior in this market. So we want to trade in the direction of the predominant behavior in this market, which is now pop and drop. And the most crucial observation we want to make, however, when we target these entries is where is the volume. So the main recommendation is to take a closer look at the VIX and the volume to give you a guideline of what you may want to be doing today and tomorrow, guys. So the VIX is still high numerical. It's above 20. The uptrend is definitely confirmed. Buying out of the money puts is still justified on market bounces. VIX actually started out at 20.6 yesterday, dropped to 18.29 and finished just above 20. This was the chart I was showing you yesterday, so we said, okay, so it hits 22, runs basically from the 12 handle all the way to 22, pulls back to 17 before further rise is what we were saying to expect next. And we didn't have a reversal all the way to 17. We did get VIX to pull back to this 18 level, 18.29 to be exact, after which it start moving higher. But it was reasonable to expect the pullback, and that was the main point, and that's what's happening. What's happening pre-market today is VIX hits that level of 2209. Remember, that was the level I was showing you on this chart, right? So it pretty much gets to 22, and it seems like in that area, if you go back in the history of the chart, I mean, this is an area to observe. It has quite a bit of importance because if we do break above that, you know, as mentioned yesterday, we could see VIX as 26 to 28 range. But also observing what VIX has been doing in the last couple of weeks, a lot of pre-market openings like this, they did result in a pullback and VIX surrendering some gains. So just remember, if you're trading VIX, that it likes to give up some of these pre-market gains, you know, briefly before rebounding higher. So ideally, you would want to wait for a pullback before getting in. Now, today we may actually get a break of this trend in the VIX. So that's why I said today is a very tricky day, guys. But I certainly wouldn't want to jump in and buy calls at the very high levels. Because again, we're getting close to an area on the S&P 2850, 2846, where the drop may just stall out there. Okay, the next market move, that meaning for today, clearly we're starting out what could easily be another 3, another 4, or an 11, and we're definitely watching out for tomorrow and Monday for a move 13. The move 13, guys, they don't happen on low volume, so that's why we don't assign a huge probability for a 13 today. Now, if the market opens and we get this crazy volume out of there nowhere to the sell side, it could still be a 13, but the volume is really light. What we're noticing, yes, we are, you know, 20, 30 points down in S&P, but it's happening on very low volume. So remember, big crashes don't happen on low volume. Just, however, to point this out, on Monday, things didn't initially start dropping on huge volume, and the volume did accelerate and picked up throughout the day on Monday, and it did accelerate and pick up on Tuesday. So maybe we're just having one of these days where the market is down. It looks like, it appears like it has a slow start, so the bulls may start biting and coming in, and boom, we get huge flush in volume and a significant move lower. So very tricky day. If you see the market trades down, guys, to this level of 28.46, I would take some profits off the table, okay? The most important observation for today, again, is the volume. Watch for any signs for acceleration in volume in either direction to open your positions or to add your positions. Have some cash ready for tomorrow and Monday. This is going to be some really cool days to trade, guys. I'm super excited for everybody. Hopefully I can talk like I typically talk here in the next couple of days. I wish everybody a great trading day. Oh yeah, and the BKNG earnings, guys, set some money aside to trade BKNG earnings tomorrow. It could be a really nice move in the stock. Based on the volume of options and the direction, there is a predominant trade that it looks like it could fall to 1650, possibly 1630 level. It trades so far today pre-market at 1750. So huge drop could be taking place, and if it does, trading this thing after earnings on a brief pop on lower volume could be highly profitable. So with that, make it an awesome day, guys. Collect the profits and stay focused, because this market needs your 100% focus. I'll see you guys in the next video.